Hello, happy to be here with you on another Financial Tidbit Tuesday with Tony, brought to you by Altra Federal Credit Union. In previous tidbits, we've discussed how to manage your money by making a budget, how to protect your money by watching out for identity theft, and now, in this video, we'll talk about using someone else's money, also known as credit. We'll examine the ways to get started and what to know to begin a positive credit history. Credit is basically what someone is willing to lend now, which could be money, goods, or services, and we could pay later. Those using credit will have to pay back what they borrow, plus interest. Credit can be a valuable tool that can open doors and opportunities, but if we're not careful, it can do damage quickly that will take some time to repair. Good credit can help consumers borrow money at lower interest rates, make large purchases like a home or a car while paying for it over a period of time. It can help lower insurance rates. It can be beneficial when setting something up like internet service so that we don't have to pay in advance. It can help us finance a new cell phone. Those are becoming more costly. It can even affect future employment. So credit is indeed an important topic, and I'm glad you're here taking the time to learn more. While having credit and starting a positive credit history is important for all the reasons I just mentioned, I don't think there's a perfect time or a certain age to get started with credit, because it's all in when you're ready. Experts say someone considering credit should have a good handle on their own money before even thinking about using someone else's. This means regular deposits to savings and maintaining a checking account without overdrafts. A budget will help immensely in this regard. If you haven't already, check out our first Financial Tidbit video on budgeting to help you get started with the budget. In general, those that make decisions on whether to grant or extend credit, the underwriters, they're looking for the 4 C's of credit from an applicant. They're looking at credit history, which is a big one. Have we been paying on time, and how have we been with credit in the past? If we've been good with credit in the past, there's a good indication we'll be good in the future. If we haven't been good with credit in the past, it doesn't mean we'll be bad with credit in the future. It just makes underwriters a little more nervous. Underwriters also look at capacity. How much credit is available, and how much are we using? Just because we have credit available in credit cards or maybe lines of credit doesn't mean we have to use it all. Maxing out your credit is not good and will hurt your credit worthiness or ability to borrow. Character is something else underwriters are looking at, which examines if the borrower has a relationship with the financial institution and how have they been with other accounts there. Like credit history, character is looking at past behavior in order to determine what's going to happen in the future. Last but certainly not least, underwriters are looking for collateral. It's what could be put up just in case things go sour. This is what backs up the credit and may secure the debt. If we don't have a credit history and are interested in getting started, it can be done in several different ways. My best recommendation is to inquire with your current financial institution. And since you already have a relationship with them, you may be more likely to be approved with a positive account history. There are student credit cards for those with an income and will start with a low credit limit to get young borrowers started. There's also an option of a secured credit card. With a secured credit card, the borrower puts down a deposit which will also serve as their credit limit. If the credit card user is good with a secured card over time, they can graduate to an unsecured card and their deposit is refunded. A positive credit history can also be established through a line of credit or applying for a loan on the smaller side. Another way to get started with credit is to be an authorized user on a friend or family member's card, but that's a little bit like credit on training wheels because the authorized user has no liability to any of the debt or has to make any payments. Also, the authorized user will piggyback on the main person's account standing. If the primary person is good with that card, making payments and keeping balances low, the primary and the authorized user will benefit. Now, if the primary misses payments or maxes out the card, both will suffer damaged credit. Another option for a credit newcomer is to have a creditworthy cosigner on that credit account. The cosigner would be on the hook if the primary account holder cannot make payments or falls behind. So it's smart to be cautious if you're being asked to be a cosigner on someone else's credit card or loan. When you're just starting off with credit, it's a good idea to play it safe and manage one basic credit card and or a small loan until you get the hang of things. You'll have time in the future to add other credit cards or loans to the mix to help you build credit. Like I mentioned earlier, not having credit or a credit history can put you at a disadvantage, but if we're not good at managing our own money and not ready for credit, and then we add, let's say, a credit card to that scenario, it's like adding gasoline to a fire. Not good. When it comes to building credit and just starting out, make sure your creditors are reporting to the main credit bureau. So we're talking about Equifax, Experian, and TransUnion, or else everything you're doing basically doesn't count because there's no record of it. We'll talk more about credit bureaus next week when we focus on credit reports and scores. When building a positive credit history, you don't need to take on a lot of debt or pay interest to get a better credit standing. Paying off balances on time and in full will improve your credit worthiness. It's incredibly important not to miss payments, not only when it comes to credit, but basically everything. When it comes to credit, it's imperative to have a plan and not to spend more than you can afford to repay. The budget is the foundation and the precursor to everything we're talking about that's credit related. For more information and resources on credit, check out our website at altra.org. Thank you so much for watching and have a great day.